Alrighty, guys, we have a bunch of earnings to break down in this video, charts, stocks. We're going to go over the indexes here as well. So jam-packed video. If y'all find value, smash that like button. Make sure to subscribe. And guys, don't forget to get your free money from Moomoo. It's free money. Once you open up your account using that link down below and you deposit at least $100, you get 5 stocks, each up to $2,000. And if you want to up the ante a little bit, fund your account with at least $1,000. On top of those 5 stocks you just got, you get 10 more stocks, each of those up to $2,000 as well. So use that link down below. And of course, that is an affiliate link. It helps out the channel. And with that being said, cheers. Let's dive into it. So check it out, man. It's currently about, what time is it? 12:30 p.m. So we're about halfway through the trading day, and all the indexes, well, are moving all over the place. We have the S&P 500 down 0.2%, the Dow's up 0.7%, the Russell's up 0.1%, as the Nasdaq's down 0.8%, and we have the VIX up almost 3% as the metals, let me see here, gold's down 0.3%, and we have silver up 0.7%. So everything is moving all over the place. It's that type of day right now in the stock market, and SPY's still struggling to break out of 455, 460, which you guys probably know at this point, especially if you've been watching my channel, which if you're not watching my channel, guys, what the heck are you doing, man? 460 is a big spot of resistance, which was the high from back in the end of July, early August, and there's no doubt about it, we've been struggling there over the past couple of days at this point. You guys can see on the 10-day, 30-minute chart, 1, 2, 3, 4, 5, 6. Today being the 7th trading day that we're failing to break above 455, 460. So yeah, that's a big spot here for the bulls moving forward. And Triple Q, which you guys know tracks the NASDAQ 100, this is now selling off a bit. We hit 394 a couple of days ago, or was that yesterday? Either way, we hit 394. Yeah, that was yesterday. And now we're at 386. We're down a good, let's see, percentage-wise, about 2% off the highs from yesterday, and now it seems like we're starting to head down towards that 180 SMA. And you guys see this, and this is on the 4-hour chart, by the way, and you guys see this little circle that I have here. It looks like that gap is slowly starting to fill here, which could get Triple Q down maybe to 370, 375, 380. That's where we could find support potentially here moving forward. So Triple Q, SPY, that's a quick breakdown there. And again, it's an all over the place type of day today, guys. It's just one of those days out there today in the stock market. So with that being said, let me dive into these stocks and break down some earnings with you guys, some numbers here, EPS, revenue, guidance, all that good stuff. So the first one that I want to break down, and of course, we'll break down some charts, guys. You all know the drill. The first one that we have to go over is Snowflake, ticker symbol SNOW, which is completely and utterly breaking out here on the 4-hour chart. The stock's up 5.6% on the day, and it looks like when the numbers initially came out yesterday after the bell, the stock went all the way to $195 per share. And mind you, the stock yesterday closed at $175, so it ran up 20 bucks like that, 10%. Then we consolidated a bit, then we sold off in the morning today up until about 10:45 a.m. on the East Coast. You guys can see we hit 190, filled the gap back down to 180, and now we're actually getting buying pressure. You all can see here on the intraday at 180. We're popping up to 185 right now, and maybe we're working our way back to fill this gap right here, back to 190, back to 192. That is totally in the cards, in my opinion, here on Snowflake. And you guys can see on the 4-hour time frame, this gap that we're in right now between 180 to about 195, that's where we were trading back in July. Looks like in June a bit as well. Yeah, early mid-June, we were trading in there. So at this point, guys, you know, again, we filled the gap to 192. Now we pulled back to 180, which was a healthy pullback. And it looks like we're trying to get back to 190, 192. Heck, maybe we even break that and start going mid-190s, high 190s. Maybe we start pushing 200 bucks again here on Snowflake. So the company reported numbers, like I said, yesterday. So let me see what they did here, guys. Let's see here what the headline numbers are. So it looks like they did 25 cents in EPS, which beat the 16 cents expected, and they also beat on revenue, $734.17 million versus $712 million expected. So they beat EPS and they beat on revenue. And it looks like here they see Q4 product revenue of $716 and $721 million, up 29 to 30% year over year. And they see full year 24 product revenue at $2.65 billion, up 37% year over year. So, of course, this company's not focusing too much on profitability, guys. Let's be honest. They're focusing on growing their segments, growing the top line, which they're doing a very good job of doing, or they're doing a very good job at that right now. I think last year in the same quarter, they did 580-ish, $570 million, something like that. I was reading it earlier today. I was reading deeper into their earnings. So they're growing quite nicely year over year. And again, keep your eyes on this pocket, this range that they're in right now between 180 to 195. That's where Snowflake is right now. And we also had Salesforce report earnings, which you guys may or may not have seen by now. And the stock is completely breaking out as well. It's up 6.5%. Right now, it's at $245 per share, and it's completely breaking out of this downwards channel that it was trading in for a good, 4 months? You guys can see here we were trading in that channel, and now earnings came out, and boom, we got completely, catapulted out of that channel, and now we're breaking out. So let me see what Salesforce did on these headline numbers. It looks like they ended up doing... where the heck are they here, guys? Revenue of $8.72 billion. All right. EPS of $1.25. Not bad. Looks like they see, what's the revenue guidance looking like, guys? Revenue guidance they see for Q4 of 9.18 to 9.23 billion versus 8.4 billion expected. What the heck? I mean, geez, that is well above the expectation there for guidance. And Salesforce sees Q4 adjusted EPS of 225 to 226 versus the $1.98 expected. And let me see here the full year guidance. Do they have anything on full year guidance? They see full year revenue of 34.75 to 34.8 billion versus the 31.75 billion expected. So they beat EPS, beat revenue. Their guidance is up big time for EPS, revenue for the next quarter, for the full year, and that is really a formula for a stock to completely break out. And that's what we're doing right now. That's what we're seeing right now. And it is a bit overbought. Let me be honest here. Very overbought in the short term. So I'm not touching this as a trade quite yet. But if it does come down, let's say, to 225 again, 230, 235, maybe it consolidates there a bit. That could be an option, or an opportunity rather. For me personally, I'm not telling you guys what to do, but that's kind of what I'm waiting for here on Salesforce. And the next stock is Foot Locker, which is also now at multi-month highs. Today it's down 3%, but yesterday when the numbers came out, or maybe 2 days ago, when was that? Either way, when the numbers came out, yeah, that was yesterday, the stock ran up about 25%. It was up 25% at its peak. So Foot Locker ended up doing, the headline numbers were, let me see here, guys. Looks like they did EPS adjusted of 30 cents, which beat 25 cents expected, and sales also beat 1.99 billion versus 1.97 billion expected. And anything here on guidance, looks like now they see full year sales down 8 to 8.5%, and they had seen it down 8 to 9% prior. I think that was before, a couple months ago. So yeah, not too bad for Foot Locker. And of course, the stock's still massively down in the past year. I mean, there's no doubt about it. But it is starting to see some upside here. We are starting to break above these moving averages, which we were already above the moving averages heading into earnings. But now we're breaking out of the highs from back in June, July, August, which were right around $25-26. Now we're starting to get out of there, guys, which is pretty good for the bulls in the short term. We'll see if that holds, but as of now, it's holding here on Foot Locker in the midst of an overall red day. Actually, it's not that bad for the Dow. But other than that, the Nasdaq's red, the S&P's red, the Russell's barely green. So not too bad of a past couple of day stretch for Foot Locker, and we'll see if it continues moving forward. What do you guys think? Let me know your thoughts in the comments. Hit that like button. Make sure to subscribe here on YouTube. It's free. You might as well follow me on X as well at Stas Talk Stocks. And guys, don't forget to get your free stocks from Moomoo. Fund your account at least $100 using that link down below. You get 5 stocks, each up to $2,000, and fund your account at least $1,000 on top of those 5 stocks for a limited time. The clock's ticking. You get 10 more stocks, each of those being up to $2,000, guys. So 15 stocks, each up to $2,000 using that link down below. Get your stocks. And with that being said, cheers. I'll catch you all later.